Hey everybody, I am Surbhi and you are watching Key Differences. In this video, we will talk about the differences between provision and reserve. So friends, what are we waiting for? Let's get started. As we always do, first of all we will understand the basic concept to know why provisions and reserves are created. So you might have heard about the going concern concept. It is based on the assumption that the business will be carried out for an indefinite period. Therefore, at the end of each accounting period, the firm should take into account the future contingencies and requirements of funds before determining the amount of net profit available for the distribution among the owners. Hence, for this purpose, provisions and reserves are created to keep aside a certain sum out of the current earnings. Moving on to our main topic, provision. The concept of provision is quite simple. As in our day-to-day life, we make arrangements to secure our future or to meet future needs. That is, we save money. So, the events which are going to happen in future are planned in the present with the help of the available resources, and the amount that is kept separately to meet such expected losses or expenses is called provision. So in business also there are some expenses which are related to the present accounting period, but the amount of that expense is not known with certainty because it has not incurred yet. And according to the principle of conservatives, such costs are not ignored, rather a provision is created and it is charged against profit of the current period. Let us go through its definition. Provision is a charge against profit. It is created against loss, liability or contingency which is known to the firm and will arise in future. However, the amount of such liability cannot be ascertained with considerable accuracy. So let us take an example. Suppose a businessman deals in furniture on a credit basis. So it is quite certain that some debtors would default in payment either fully or partially. Hence, in such cases, it is very important to recognize the expected loss at the time of ascertaining the profit or loss for the period. In this way, provisions for doubtful debts are created to cover the anticipated loss at the time of realization from debtors. In the same manner, provision for taxation, provision for bad debts, provision for repairs and renewals of fixed asset, provision for depreciation, etc. are created. Now the question arises, when do we recognize a provision? So, we recognize provision when there is a present obligation arising from a past event. Next, when there is a possibility that to settle down the obligation, the outflow of resources representing economic benefits will be needed. Next, a reliable estimation of the amount of the liability can be made. So here, you should also keep in mind that the provision can be used for those expenditures only for which it is originally recognized or created by the firm. Coming to reserves, we all know that our future is not certain and anything can happen at any moment. There are many contingencies and needs. So, as we make arrangements for expected losses, we can also do the same for unexpected ones. That is, we could save money and when any unexpected event arises, we can use that money. Therefore, the amount that is kept aside from current income to meet unexpected happenings in future is called reserves. So, let us look at its definition. Reserves are the amount earmarked out of profit to meet any unknown expenditure or loss. It is basically preservation of profit. It is an appropriation of profit or accumulated profit. It is not meant to cover any liability. Rather, it is kept in business to provide for certain future needs such as growth and expansion of business or to meet future contingencies. It must be noted that retention of profit as reserves will reduce the amount of profit available for distribution among owners. Now you must be wondering, where does it appears on the balance sheet? So it appears on the liability side of the balance sheet under the head Reserves and Surplus. Further, reserves are divided into two categories on the basis of creation and on the basis of objectives. So on the basis of creation, there are two types of reserves, revenue reserves and capital reserves. Revenue reserves are the reserves created out of profit earned by the firm during day-to-day business operations, whereas capital reserves are the reserves created out of capital profit. So capital profit is the profit on the sale of fixed asset, settlement of liabilities, premium on issue of shares, pre-incorporation profit, etc. Next, on the basis of objectives, there are three types of reserves: general reserve, specific reserve, and statutory reserve. General reserve are free reserves which are not created for any specific purpose. Specific reserve is the reserve created for definite purpose like debenture redemption reserve, development reserve, dividend equalization reserve, etc. Statutory reserve. Statutory reserve is the reserve created due to legal requirement. For example, capital redemption reserve whose creation is compulsory. Now we will understand the concept using an example. Suppose we have a gross profit of rupees 1 lakh and income from sale of investments rupees 20,000. The total expenses is rupees 70,000 and provision is rupees 10,000. So here we have a net profit of rupees 40,000. Now out of this net profit that we have earned, we will create a reserve of rupees 15,000 and rupees 20,000 will be distributed as dividend and the rest of the amount will be kept as surplus. Therefore, what we have noticed in this example is that provisions are created before the calculation of net profit, but reserves are created after the determination of net profit. Also, provision is debited in profit and loss account, whereas reserves are debited in profit and loss appropriation account. Difference between provision and reserve. Meaning, provision means to provide for an anticipated liability or expense that may arise in future, whereas reserve means to keep aside a part of profit for future use. Next, while provision is a charge against profit, reserve is an appropriation of profit or accumulated profit. Next, in case of provision, we provide for known liabilities and anticipated losses, whereas we create reserves for unknown liabilities and expenses. Further, for the creation of provision, earning of profit is not necessary. That means it can be created even when the company has not earned profit in that year. But for the creation of reserves, the earning of profit in the year in which the reserves are created is necessary, subject to certain exceptions. Next, appearance in the balance sheet. While provision for assets is shown as a deduction from the concerned asset, while if it is a provision for liability, it is shown in the liability side of the balance sheet. On the other hand, reserves are shown on the liability side of the balance sheet under the head Reserves and Surplus. Mode of creation. While provision is created by debiting profit and loss account, reserves are created by debiting profit and loss appropriation account. Next, investment. Provision cannot be invested outside the business, but we can invest reserves outside the business. This means that in case of provision, we have to use the money for the purpose for which it is created. Next, the primary objective of provision is to cover any known expenditure or loss, whereas we create reserves to strengthen the financial foundation of the business. Necessity. While creation of provision is a legal necessity, so it is necessary for a firm to create provision. Conversely, creation of reserves is discretionary. This means that it depends on the will of the management of the company, except in case of a statutory reserve, whose creation is compulsory. Next, distribution of profit. Dividend can be paid out of profit left after the creation of provision. On the other hand, reserves are created out of divisible profit, and divisible profit is left after the creation of reserves can be distributed as dividend. So friends, this brings me to the end of this lesson. I hope the concept has been clear now. However, if you want to study the topic further in detail, you can visit our official website, that is keydifferences.com. Here you can find a detailed comparison of provision and reserve along with their definitions. Links are also provided in the description box below. I hope you liked this video, and if you did, please do give it a thumbs up and share it with other people. Also, if you are new to this channel and wanna get more such useful videos, consider subscribing this channel and also hit the notification bell next to the subscribe button so that you are notified every time whenever a new video is uploaded on this channel. And if you have any queries or feedback for me, feel free to leave in the comment section below. Until next time, this is me Surbhi signing off.